G'day guys, Day Geary.
Hi everyone, Daniel Hastings here. Welcome to April 2023 video blog for the Illawarra property market and David April. It's an interrupted month, isn't it?
It's been an unusual month. April with the Easter break and the Anzac Day has been quite slow compared to the rest of the year.
I think the Anzac Day sort of almost developed into a second long weekend, which doesn't always do that every year, I guess. And yeah, definitely saw some interruptions, I think.
We did, and we noticed like inquiry levels are down on all stock. It doesn't matter where we were, if it was at the lower end or the upper end of the market, inquiry levels were down. And that's probably in the back of inflation at the moment as well. People are a bit hesitant, Dan?
Yeah, I think so. But I think, and also too, I think it's been hesitant, not just from a buyer inquiry point of view, but even people distracted from the point of view of getting on the market as well, to some degree as well. So it's going to be interesting. I know we've had a few listings be delayed, and they're probably going to be more active in the May sort of time frame as well. So whether that's to do with these long weekends, etc., maybe a contributing factor in some ways.
It's funny, you think about it, like last time we were speaking, we were talking about March as being one of the busiest months.
Yes.
And statistically through the industry, March is a fantastic month to sell.
Yep.
And then it's funny, it just rolls straight into April, which slows down again. So very, very, both ends of the spectrum, as they say. So,
I think so, yeah.
And what's the advantage of possibly going on the market now, Daniel?
Oh, absolutely. Look, there's definitely, I think there's a good argument. You have your peak periods. A lot of people hold off to the new year or the spring periods to list their properties for sale. And I guess the madness, if you like, around that is that if there's more people doing it at that time frame, what does that lead to? More competition.
Correct.
So I guess in the periods, and sometimes when you look back over the years, there might have been a little bit more of a lull period in the winter type time frames, and I guess we're in autumn at the time of filming and approaching winter, but I definitely think there's a very good argument for selling more in isolation, having less competition. And even if potentially, if you're sort of weighing up an argument, that buyer activity is less, when you look at it all coming about, it should balance out pretty well most of the time. You know, less supply, okay, maybe a little bit less demand, but look, if people are out there actually looking, the genuine buyer will always be on their feet and out and about to have a look at their opportunities, especially at the moment when there hasn't been a lot of listings as well. So I think there's a lot for considering something in the near future. It suits your circumstances otherwise.
That's interesting you're saying that as well, because the stat came out today that the growth has been, the real estate market hasn't been negative, it's been positive.
Yeah.
Look, it's 0.4, so it's pretty well level.
Yeah.
But it's still positive.
I've got to be honest, I think it's massively positive. I mean, how many economies, how many markets could you see 10 or 11 consecutive, at one stage consecutive, interest rate rises and not see an absolute plummet? There was initial correction, largely stayed the same like we've said before, slight dips if anything after that initial correction.
Correct.
It really has been resilient, and it just further shows what a healthy investment that bricks and mortar really is for you and your family.
We're just speaking in our salesman today, before this meeting here now, and saying that real estate's a long game.
Yeah, it is.
It's always a long game.
Yeah.
And it always seems to, you look at it for where it starts, it always finishes positive. It always does.
Yeah.
You just ride through all the old Loch Ness Monster with up and downs, but on an average it goes up.
It definitely does. Yeah. So the foreseeable future, let alone the longer term, looking very healthy for the market conditions right now.
Just a quick little forecast, we're coming into financial year. What do you think the rest of the year holds?
I think there's a lot of positivity, especially economically speaking. There's a lot of economists talk about largely being the vast majority of interest rates have probably been now completed. I don't know if we're totally going to avoid them for the rest of this year, but there's not going to be a lot, if any. So I think that's obviously good to see that we now know where we stand as far as interest rate payments and so forth are concerned.
It won't change much at all.
For the foreseeable future. We're there now. And look, I know that everyone says, there's arguments both ways, but it is still relatively affordable as far as interest rates are concerned. We've got to talk about affordability and, the cost of property versus past years, certainly acknowledge that. But the realities are that it was extremely cheap for economic reasons that needed to keep things stimulated. Where I guess we've talked about balance a lot in this market, and probably interest rates are at a balanced level now for the foreseeable future. So there's a little bit more certainty there, I think, now.
I was hearing, and I will get some statistics on this in our next blog, but I heard that they were talking about eventually the rates might come back even a little bit off where we are now.
Yeah, there's certainly talk of not just staying, it could
decrease
come down after the initial of these shocks are sort of evident, I suppose. So in the economy, so it'll be interesting times for certainly the next 6 months or so.
Yeah, excellent. All right, I think that might be a wrap.
All right.
Thank you, guys.
Thanks for your time.
See you next month.
See you then.